Okay, so there's a lot of money still going into AI. US venture capital firm Andreessen Horowitz, a legend in Silicon Valley, just got attention after raising more than $15 billion US with plans to invest in AI, defense, and biotech. And closer to home, Canadian firm Onyx is extending the life cycle of the public markets. What does that mean? Let's get more from Dan Rohinton, portfolio manager at I8 Global Asset Management. Dan, thanks very much indeed.
Yeah, thanks for having me.
Tell us what we should bear in mind about Onyx here.
Yeah, and I want to bring in what you talked about with Andreessen Horowitz as well, because it's part of a broader continuum and a story that doesn't get as much attention as it should, which is the role that private markets play today in capital formation is so much more significant than it has been in almost a generation's time. Onyx is one part of that conversation because what they did with the continuation fund, Onyx's fundraising story is actually more a question of curtailing, retrenching back to their industrial roots. But what I thought was really interesting about the continuation fund, the 1.6 billion, is there's a few assets they want to hold on to, but private equity windows are very clear cut, 7 years with 3 years before that to deploy. So if you want to hold on to an asset for a decade, the normal route, Andy, was take it public.
Right.
And now the route that's being normalized is, well, we'll just hang on to it longer because we like it that much more. And then you make a few phone calls to some big institutional partners of yours, and then you can hold on to it for the foreseeable future. And I'll bring in Andreessen Horowitz into that conversation as well, because their big fundraise, what I think is interesting about that is half of that was actually to put it into late stage companies. So this isn't the company you think of as early seed, or Series A, Series B, when the founders are just figuring out their way. These are large assets. Like Anduril is one of the largest military manufacturers in the U.S. at this point.
They make submarine drones, I believe.
That's what they're looking to do. They're trying to do ballistic missiles. Cruise missiles, I apologize. And then you have Cursor, which is another $30 billion asset. Then there's Databricks, which is a $100 billion plus asset. These are mid to large cap public companies that are in a venture capitalist hand still, and mid cap companies in the case of Onyx that are in continuation funds. And I think that's a story that deserves more attention.
So when you say extending the life cycle, normally there was that traditional cycle, venture capital or private equity would buy a firm and then hope to make a huge profit when they took it public a few years down the road, but they're waiting much longer.
Yeah, and the path exactly was venture capital would say, we'll give you $1 million, $10 million, maybe 100 million, and then you got to go to the public markets.
To the old IPO,
And private equity would say, we'll take you out of the public markets, we'll do some stuff, 10 years later, go back to the public markets, and out we go. Now we're blurring all of those lines, and I think that's going to be interesting because there's already such a backlog of private companies that are waiting to go public that I think this is the year where either the big foundation model companies, the Anthropics, the OpenAIs of the world, do they go public or not? Or do they decide to go the Databricks route?
Go the what route?
The Databricks route, where you just go from Series A to your Series L. You just keep raising private rounds and keep floating that equity between the Andreessen Horowitz, the SoftBanks of the world. But this is the market where this is the year where we're going to see if public markets have a role to play in early mid-stage companies, or if it's only really going to be the mid to truly large cap stocks that stay public.
So I suppose if you go public and then the market is so fickle and your stock price tanks, that's sort of a black mark. It damages your reputation.
Exactly, and that's part of the interesting dynamic. I would tell you that there's truth. More sunlight is good for valuation. So having a stock that trades every day, being held accountable to a broad list of investors, professional investors like myself, retail investors that are doing it day to day by themselves, that whole continuum is a cleansing exercise. I'll use the words of the Zendesk CEO when he talked about going public, and this was many years ago, is eventually you got to move out of your parents' basement. So I think of public markets as that moment for going and really putting your fundamentals to the market test by a broad list of investors versus the 12 people that you call who are funding you in the private markets.
We have seen this steady decline in listed companies. I mean, and just regularly companies being taken private off the TSX.
Yeah, and I think one thing that's interesting to talk about here is the Canadian Venture Exchange is very unique. Like, we think of it as there's a venture market, then there's the primary listing market and the Toronto Stock Exchange. The venture market really doesn't exist elsewhere. So it's very unique territory, the way Canadian market structure is set up. But your broad point, Andy, is 100% correct. Outside of really capital-intensive companies, like resource companies, mining companies, and things, and big industrial companies like that, we haven't seen public markets keep their market share, if you will.
And of course, one reason apparently is this is going back to the Paleolithic era. Your stockbroker would phone you up and tell you, hey, I got a good stock for you. But now he or she just sells you a money management program.
That's right. Yep. The consolidation on that front as well. And that's part of the broader soup. But I think the main point here is we're seeing this gray zone happen in a way that we haven't seen in, frankly, a generation. And
what do you mean a gray zone? Sorry.
The gray zone of what public markets are, what private markets are. There's now crossover funds. There's continuation funds like that's being talked about here with Onyx. But every one of these companies is doing so. And it's to an extent where even if you take a step back and you ask, Apollo is actually building an investment banking operation. So it's this type of dynamic that we're seeing where the nature of what it means to be public-private is fundamentally graying. And what will be interesting to see over time is, can individual founders push you further in that direction? And are they just motivated to stay private? Or do they see the value of public markets? And that's on the exchanges that we see to really drive that bus home.
Talk to us a bit more about Andreessen Horowitz, the legendary US firm. And you say national interests are increasingly on the agenda for a firm like that?
Yeah, and this is one of those things where the two founders would actually tell you they used to have security clearances with the US government. So they were privy to very secret information in the first place. So there was a time where venture capital was actually funding national strategic interest companies decades ago. Then there was a wave of basically in the last 25 years, the late 90s on till the last 2 years, there was a wave saying, we don't want anything to do with the government. We are in our own internet bubble, and whatever happens in the national interest, that's someone else's problem. It's back to the future all over again in 2026. We're going back to the world where venture capital raising, strategic industries is fully coming back into the fold at the very earliest stages. And it's not a surprise that Andreessen Horowitz is leading their charge because they are by far the biggest venture capital operation out there.
Dan, thank you very much indeed.
Thank you, Eddie.
Dan Rohinton, Portfolio Manager at IA Global Asset Management.